You are watching Domus Crypto Lounge Podcast, Episode 3, with Alex and Chris.
Hello, everybody. Welcome back to the Domus Crypto Lounge. I have Chris Euler again alongside me. Hi, Chris. How are you?
Good, man. How are you?
Good. Fantastic. So before we get into what happened in August and what's going to happen in September, as usual, a small disclaimer. This is just a friendly chat. Do your own research. This is not the trading advice, investment advice. This is just two people chatting. All right. So let's get into things. So what happened in August?
Yeah, well, I mean, the better question there is like, what didn't happen in August? We started off the month about as rough as we could possibly get, literally going from the first of the month down to 49,000 on the on the index. So we had a massive absolute collapse, and this is largely due to a couple things. One, I would say one of the big catalysts was like the Japan carry trade unraveling, and then we also saw the sharp decline on traditional indices, like for traditional finance. So the NQ and the ES all dropped close to 10% in a very short amount of time, and it accomplished two things really. The big thing for Bitcoin is that it washed out all of the existing major long orders on Bitcoin going back to mid-February. And that's a significant flush out of that long liquidity. And that's a general thing that has also happened almost every single cycle, where once we go through a halving period, now we've gone through a pretty good consolidation period, and there's a major flush out. And I think with Bitcoin, I mean, in a period of about a week, we dropped about 30%. So it's not an insignificant drop, but we've recovered most of it now since it's the 27th, almost end of the month.
Yeah. I mean, imagine just seeing your assets drop by 30% in like 1 week. I mean, that would induce panic in almost anybody. And we saw that a lot of, these secondary feedback loops in the market actually saw this exact, panic in the market, triggering, a panic sell in the market in the span of like 1 week. But, actually, we saw that, Bitcoin reached for a bit, it reached 70K, the psychological level of 70K, and then, dropped like 30%. It was insane. It shows the volatility in the Bitcoin market still, even if, the Bitcoin dominance is really, really high, like, you said, like 60% or, more. I forgot the number. I know but
yeah, but it is very high. Absolutely.
Yeah, it's really high. So we saw this, dump in the market in the span of 1 week, and it made me think as a passive trader or crypto investor or a crypto newbie, this kind of movement would really impact psychologically anybody. So maybe we can discuss a bit before we go on into other topics, what we can do to prepare for this kind of events and what to do during this kind of events.
Yeah, I mean, the big thing you have to be concerned about is obviously a 30% reduction if your Bitcoin's your primary asset you're investing in. That's a wild loss within a very short amount of time. However, given the resiliency of cryptocurrency and the fact that we know for a fact that we've done this every single cycle since the beginning, that it was not unexpected. So when these types of things happen, you have to look at it in two ways. And one of the hardest things for people to do is to look at rotating into profits or like a stable coin, for example, as the price moves higher, because they have the inherent feeling of greed. So instead of basically taking profits as the price is going up, they start to wait until they're losing money, and then they panic and sell out oftentimes at a loss. And this is indicative of like every market psychology paper ever written. It's very simple. When everything's collapsing and there's massive fear in the market, and Bitcoin down 30% in a 7-day period, everyone who's not used to this type of volatility is pressing the red button. They're saying, eject me, get me out of this. And what follows that always, without fail, it's a massive rally, and which is what we've basically had. So there's two ways to look at it. You can either start to look to rotate your Bitcoin into stable coins or into other assets as the price moves higher, or you can look at it as a way of like, well, my long-term position is holding Bitcoin, and that's one of my strategies, which is I plan to hold Bitcoin for the rest of my life and for my kids, and basically it's my retirement fund. So I have no problem weathering a 30% down move within a week, which sounds pretty wild. Now, that being said, your long-term outlook has to also coincide with the localized happenings in the market. So if everything does start reversing, have the plan not to just, exit and be done with it, but also have the plan to say, well, if I'm exiting now in profit and the price is moving down pretty aggressively, I also want to start re-entering the market at potentially more or more favorable lower levels. And that's basically what we have. So I'm of two minds of it. For the average investor, you need to have it set up very simply. Buy a little Bitcoin every month at any price, knowing full well within the next 3 to 5 years, it's going to significantly increase over time, as probably the best investment most people have. And if you're trying to play the trading game on lower time frames, it's very simple. You do take profits as the price goes up. You don't exit and panic as things go down. That's not good trading. That's basically riding the emotional wave of greed and fear.
Yeah, exactly. And one other aspect is the fear that they're going to lose everything. And this is a psychological aspect that maybe we need to address and tell everybody that Bitcoin is here to stay. Right now, it's the third largest asset globally by market value, following just gold and US dollar. So the big funds are investing, they have a large position in Bitcoin, and they keep increasing their holdings in Bitcoin. So Bitcoin is here to stay. It's not going to disappear overnight, right? So this kind of price movements, you need to think of them as temporary.
Yes, absolutely. And to that point, what's the current Bitcoin ETFs look like? Well, since their inception just at the beginning of the year, their market cap's at almost 60 billion. So $60 billion, a couple 100,000 Bitcoin. And that's not something to take lightly, especially when you have the biggest investment funds and corporations on the face of the earth heavily investing into this asset. And that's not something just from one perspective. That's now, pension funds. That's now basically any fund out there can now get exposure to Bitcoin. Previously, before the ETFs came around, there was CME, the CME futures and stuff like that. And, oddly enough, MicroStrategy, which, say what you will about Michael Saylor, he pioneered the ability to allow companies and traditional investors to invest in Bitcoin using MicroStrategy as a proxy. So it was brilliant, and it worked. So it's here to stay. And the fact that it's a diminishing amount of Bitcoin that's being released every year, and as every halving, it becomes less and less. It's a simple economic question of supply and demand at this point. So there's going to not be enough Bitcoin to go around. There's 21 million, and that cannot change.
Yeah, exactly. And maybe we can mention the big wallets and how we can look at those, and how we can incorporate that in our view of the market.
Yeah, I mean that's the number one thing to keep focus on. A lot of people look at Bitcoin flows in and outflows and stuff like that, when what you really should be focusing on is the big money, the people who are accumulating, the exchanges that have these massive cold wallets. And if you can just Google that top 100 richest Bitcoin addresses as an example, those are a couple different options, but they're adding, like, even in the last 30 days, I could scroll down the list, added 30 11,000 Bitcoin added, 21,000 Bitcoin added, 32,400 Bitcoin added. This is not, you know, the idea is people look at it and who are actually selling. You're not having the wallets with several thousand Bitcoin selling. Those guys are only accumulating. The people who are selling, especially at lower prices as price collapses, these are the small wallets. These are a couple of Bitcoin to part of Bitcoin. And all they're doing is they're taking a short-term approach to a long-term solution, which is retail money, giving their money because of lack of patience, their Bitcoin, to large entities that are accumulating over time. And it's that simple.
Yeah, and Leah will also be able to do that exactly the same thing. So basically, you can ask Leah, hey, how much did the big Bitcoin wallets accumulate in the last 7 days? And she will be able to answer that, and you'll be able to understand if the overall sentiment of the market is still, on the uptrend. And moreover, Leah can also handhold you through these rough times, during this price drop, this panic selling and liquidations of position. Maybe then we can discuss a bit about that as well. But Leah can actually tell you what's happening so that you have a better understanding if this is temporary, maybe how long this would is expected to take, and if this is an irrational behavior in the market. So maybe we can discuss a bit about leverage trading and how insane traders open positions 100x leverage.
Yeah. You want to talk about like one part of the reason why Bitcoin collapsed so heavy and hard. Well, we've been effectively in a range for the majority of the year. So since the beginning of March, when Bitcoin hit a new all-time high, we began the ranging process, actually technically downside trending in kind of like, I guess the traditional term would be a bull flag, but just flagging out effectively, creating a larger time frame range. But what this does is twofold. It allows lower leverage liquidity, which are often larger positions, to accumulate on both sides of the extreme highs and the extreme lows. So when we had that major flush out, combining with the fact that you saw massive movements down in traditional finance, you saw the Nikkei from Japan collapsing pretty hard because the Japan carry trade failed or unwound quite a bit. So a lot of these things kind of perfect stormed it together, and the fact that now we've literally taken all of the market long leverage liquidity, or the large positions, going all the way back to middle to beginning of February. So where's the safe longs in Bitcoin left? Well, they're probably sub 50K. That's the reality is. So what we've had now, if you think about the entirety of like the futures market, in you have shorts and you have longs, people trying to buy, people trying to sell at different price points. You've now effectively in the last 3 weeks, you've knocked out almost the entirety of the long order books. So the immediate response then by exchanges, because they need to have balance in their books to be able to like provide liquidity, is to heavily incentivize people to start longing again. And because you've taken out all of the liquidity to the downside, you're now effectively looking at it in terms of, well, liquidity and liquidations are fuel. And if all the fuel has been used to the downside, there's only one way to go, and that's back up. So now we've got 3 weeks of pretty good upside movement, and we're still, there's plenty of short liquidity above us still. But all it takes is a little bit of failure to bring us back down to those low 50s where we need to see holds of levels. Because at the moment we start losing the lows again at 50K as an example, the expectation is really simple. We'll probably do exactly what Ethereum has already done, which is it went back to its yearly open.
Yeah, and just to maybe we can have like an educational moment for the audience. Let's explain what is leverage trading in a few words.
So effectively what you're doing in leverage trading is if you're using leverage, right? So you're being provided liquidity to buy at certain prices or sell at certain prices. So it's simpler to explain for longs. Longs are basically, it's like, okay, I want to trade at 10x and I have $100. That means that I'm effectively trading now with the value of 100 times 10, which is 1,000. So we'll call it 1,000 contracts. And that's pretty simple. You're with these contracts, you're basically saying I am buying now with the promise to, when I close my position, I will sell that exact same amount of contracts and I will bank the difference. And that's how long trades work. Short trades are a little bit, or pretty much the same, but a little bit more complicated, because what you're actually doing is, let's say I'm using, again, simple math, $100 with 10x leverage short. I'm basically I'm basically selling the contracts worth $1,000 where I enter the short, with the promise to buy back at whatever the price is when I close that position.
So basically, you're betting that the price will go down, and you're going to be able to buy that at a lower price, making a profit.
Exactly, and that's the difference in splitting that difference, and that's how shorts work. So it's, again, it's a little slightly more complicated, but it's pretty simple when you really look at it. And yeah, and so looking at it all in that perspective, because this uses leverage, right? We're using liquidity that's being provided from market makers and liquidity providers on exchanges. What that does is it massively inflates the amount of volume that's being traded. So now someone with, $1,000 doing a 20x leverage is now trading with a value of $20,000, right? So you're talking about really increasing the volume capability, which is why the futures trading gives us quite a bit of extra volume and much more overall volume usually than spot. So even now, the Chicago Mercantile Exchange, the CME, their Bitcoin futures still has the highest amount of I believe it's open interest, but the highest amount of volume, and that's pretty impressive given that it's not even on a normal exchange. I think after that you have Binance and others, but so the amount of volume that's created is significant, and these type of liquidity zones, now we can start looking at it in terms of price movement. So if price moves, for example, the standard is about 0.7% away from a certain price point. Let's say if you take a long, for example, at 60K, and price moves against you 0.7%, you'll lose that 100x long, because you're only going to get around about 0.7% when you get 100x leverage. So when we have these massive flushes down, what you actually get are what we call cascading liquidations, which means liquidation blocks where a liquidation event is when traders are forced to exit a position. They don't have a choice. It says, well, I'm in a long or I'm in a short, and it's gone against me to the point where the amount of money I put up to support that trade isn't enough to carry it any further. So the exchange forces you to close that position and take whatever the loss difference is. And that's what we see with massive liquidation events like we saw on the 5th of August, which is price nuking, hitting into different liquidation points, and each liquidation pocket is just fuel on the fire, forcing price lower until eventually there's a capitulation point where there's just not enough fuel to keep going down, and you get a strong bounce.
Yeah, and actually we were looking at our trading bot in the strategy that we are employing, and we saw that we actually predicted exactly this kind of movement. Maybe we can talk about that for a bit.
Yeah, so it effectively picked this moving up at about 66.5K, which was back on the 29th of July, where we basically said, yeah, there's no longs in place. You have to flip short because it's exiting every long position. And yeah, it effectively just said the market conditions are not there. We're trending actually pretty hard down, and yeah, it picked the entire move up and would have caught, and actually did catch the entire move down, which is about 25%.
Imagine opening a short position at a 27% potential, let's say. So, stay tuned because this is just the tip of the iceberg of the potential that we are implementing right now in our trading automation ecosystem. That will be part of Domus Crypto. But yeah, I mean, exciting times. In my opinion, every time there's high volatility in the market, it's a reason to look at the price action, to look at what's happening in the market, and capitalize on the movements. But let's discuss a bit about the other events that happened in August, and we can maybe start a bit going a bit back on the 23rd of July, because we touched on this last time for a bit. I'm talking about the Ethereum ETFs and starting to live trade on the market on the 23rd. So maybe we can discuss a bit about what happened and what's been happening, and what's the overall feeling in the market, sentiment in the market regarding the ETF, the Ethereum ETF.
Well, I think overall they could probably not have picked a worse time to launch an ETF based off of market structure. Obviously, they want to get it out there as quickly as possible, but Ethereum was already in a downtrend, and a pretty substantial one at that. It had actually made a move up to potentially re-achieve 3,500. It then collapsed really hard going into later on in that week, and failed again really miserably, to start an incredibly strong down move that, by and large, kind of led into the major, Black Monday, the August 5th, excuse me, dump. So they, like I said, they couldn't have picked a potentially worse time to actually list the ETFs. And say what you will about Ethereum, there's a lot of changes that have happened in the last several years, proof of work, proof of stake, all these things out, different merges and stuff like that. And the market really just isn't beneficial right now to altcoins. Like, most altcoins have not made new all-time highs. Most altcoins are still significantly down compared to last cycle. Some, even the top 20, top 30, you have many that are 80% down still. So it is still by and large a Bitcoin dominated cryptocurrency market, and that's indicative of the Bitcoin dominance. It's at 57.6% as of today. So still very much a Bitcoin favorable market compared to Ethereum and everything else.
Yeah, but we saw this kind of behavior when the Bitcoin ETFs started to trade, right? So the initial downtrend, and then the retracement, and back trending up towards this level that we have right now. So should we expect an accumulation in the next period?
I think for ETH, it's going to happen eventually. But for right now, if you compare, for example, like the ETF sizes and like what's performing compared to what, the Bitcoin ETFs have like a $59 billion market cap currently, and they're doing about like what, 1.3 billion in volume or more. Comparatively, I think the largest one on Ethereum has a couple hundred million at best. I can't even find I'm looking for some decent data. Yeah, 110 million in assets. 74.6, 40.8 for Valkyrie and Pro. Like it's so insignificantly small in compared to the Bitcoin ETFs. That it will absolutely take time, and that's kind of a transitional phase that'll just it's literally going to take time, because how long did it take for Bitcoin ETFs to appear? How long did it take for that to become a realized new asset class in the markets? For we have ETFs now, Bitcoin ETFs. It took a very long time, and it had been talked about for years and years and years, and finally came to fruition. And now within just a couple of months, we have Ethereum ETFs, and Ethereum is wildly different from Bitcoin, and it's significantly lower in market cap and market dominance. So yeah, it's a time-based thing. I think over time the ETFs will improve and will do quite well, and I'm sure in the next couple of months we'll probably start looking at other asset classes, maybe even like XRP or Doge or something could get an ETF. And I don't think that's like the worst thing. I mean, having more institutional access to ETFs is great, but at the same time, it's not as simple as Bitcoin, because there's no asset class like it. It's completely dissimilar to the rest of cryptocurrency. It stands out for that fact.
You mentioned a couple of times, you mentioned trending or ranging. Can we maybe explain a bit what those terms mean?
Yeah. So I mean, and the funny thing, it's like we talked about earlier, was a kind of it's a bit philosophical almost, but the market ranges consistently. Like everything is a range of a range. But when you zoom out and go on higher time frames, you can very clearly see, boxes of price action structure where price will move up and down within a set range high and a set range low pretty effectively. And then trending really comes into the term of what time frame you're looking at it. So if Bitcoin price creates a range and then it goes up and creates another range on top of that range, you're gaining ranges. You have upside trending price action. And that's the way we kind of look at the market. So now when you look at a very, very high time frame for Bitcoin as an example, you can make the argument correctly that we've been effectively ranging since March on the weekly time frame. Now, is that really effective for a lot of traders to use? No, maybe it's good for investors who are very high time frame, multi-year outlooks, but for traders who are looking, 4-hour daily time frame, that type of stuff, yeah, you can very clearly see from the lows of the month, at the 5th of August, that we've been trending to the upside. We are gaining ranges, right? We've gained $57,000. 57 was like the first major range gain that we've done since we went down to below 50K. And now where we are from what we did on Friday. Friday, the euphoria that came after Powell's speech, we went to 65K. And now we're looking to potentially back test some previous levels, 61.4, 60K, and see if we can actually hold price for some type of continuation.
Yeah. This is, I told you, this is a really philosophical way of looking at the chart.
Yeah.
Basically, how to understand levels, ranges, and how those impact the entire price action. So yeah, one more event that happened last Friday on the 23rd of August. Let's talk about that for a bit.
Yeah. Well, there's a couple things unpacked there. The big thing, like number one, was Federal Reserve Chair Powell speaking at Jackson Hole, Wyoming. And he basically outlined that in September, and I think the next FOMC meeting is on September 18th, that they're looking to start cutting interest rates. And that is a very significant event since interest rates currently are at about 5.5%. So the fact that they're starting to reverse their policy, their really restrictive policy, because that's what raising interest rate is. It's technically a restrictive policy. It's going to shake up the market. There's going to be massive changes in volatility. Now, what we're all hoping, obviously, is that the same thing that happens on September 18th of 2024, next month, is not the exact same things that happen on September 18th, 2007. That would be a terrible thing, because back then, that was right as the housing crisis was coming to its head. Interest rates were reduced as they were in 2007, as they were expected to now be reduced in September, which led to year and a half downturn in the market, which was the greatest recession since the Great Depression globally. So,
I mean, that sounds like a bit apocalyptic. Maybe
that's worst case scenario. That's worst case scenario.
Yeah, but maybe we can discuss a bit about the impact of the interest rate in the market.
Yeah, I mean, so interest rates basically just determine quite a bit about what actually happens as far as like cost. So an example of like I think it's better to just talk about like the result of raising interest rates. And generally what that does is it makes it more lucrative to hold capital, to hold cash, right? So these type of like policies that increase interest rates, they actually tend to increase the holding of the currency, as people can then make money holding that currency as compared to other asset classes. So generally, when you raise interest rates, that's actually putting limiters on the expansion of like the asset market, where you're looking at stocks and everything else, and crypto specifically. So we've been in a restrictive environment, but we're still making new all-time highs. What's the underlying cause of this? Well, the real underlying cause is that there's a lot of money printing going on. The money printers are on, they're going back to full force. They've been going very strong, and there's a reason why we have a 4-year inflation rate of about 40% globally, because everyone printed money back during the lockdowns. So it's not just like an outlier event that we're now starting to lower interest rates. This has been compounded by the issues that were created in 2020. And, all of the conditions from 2020 going back to 2008 has been kind of led up to that scenario. Because the reality is, in 2020, we should have, like, the entire global economy should have collapsed into a depression. How did it not do that? You print money, which causes inflation, which basically kicks the can down the road to deal with the problem later on. And that's what we're kind of dealing with now.
Yeah, and another aspect that, and a segue to the next topic is what to expect in September regarding the possible interest rate hike by the Federal Reserve. Historically, the crypto market has shown an upward trend following the interest rate hike by the Federal Reserve, which might seem counterintuitive, but this behavior is often due to a buy the rumor, sell the news dynamic. So maybe we can discuss about what can we expect in September, not only regarding the interest rate, but also in general.
So for the time being, we do have some good upside trending price action. However, there's no real clear changes in the overall direction of Bitcoin at the moment. We're still kind of stuck in this kind of this lower high kind of hell, where we're going from 70,000 and then recently wicking as low as under 50K. For right now, we're still actually looking pretty positive as we've gained levels locally. This could reverse very quickly the moment we start losing levels again, losing ranges to go back lower. So I think the biggest thing right now is expect that middle of September is going to be probably the biggest volatility event we've had for a very long time, especially since there's a lot of alluding towards the reduction of interest rates. Like, they haven't come out flat and said it. However, he has said specifically, we need to change our plan, because the economic data was actually showing pretty positive changes to where these type of interest rate reductions are possible. So I think there's going to be a massive volatility event more than anything. Most likely, it's going to be a buy the rumor, sell the news, and that's what happened the last time we had a major economic event, like I said, was 2007. So I'm very, very hopeful that we don't have that kind of same scenario. But it is counterintuitive to have interest rates dropping. However, there's other macroeconomic factors, unemployment rates increasing in the U.S. specifically, but there's an election cycle in the U.S. that's shaking everything up. So I think what happens next month, since it is the end of Q3, is going to very significantly determine the end of the year, and probably going into an expectation of a bull market continuation for Bitcoin, because we have technically made a new all-time high. However, Bitcoin could very easily go back into bear market conditions if it goes back under $40,000. Not saying that that's likely. It's quite unlikely currently, but you have to always have that kind of like mentality. So I'd say for normal investors at the time being, you need to just be buying Bitcoin at every price, and understand that there is an expectation that regardless of where price is within the next year, that that in the next 3 years, it's going to be higher than it is now. And that's the kind of outlook most investors should have. With traders, it comes with a different type of mentality, which is, I'm looking to capitalize at all times to increase capital to buy Bitcoin, the expectation that things go over, or buy altcoins and all that. But I'm not a big fan of holding stuff like that long term. I think the biggest thing people should do is, like, you can capitalize on altcoins and stuff like that, but it all should be a rotation back into holding Bitcoin overall. So yeah, I think from right now until September, it's going to be lots of uncertainty. And once we get through the 18th and we get the interest rate decision, whether they cut interest rates or not, I think there's going to be a massive, massive volatility event, and hopefully not just pure panic. But all that being said, the positive side of this is we have tons of money coming back into the market because the Federal Reserve is just printing. So M2 is increasing, global liquidity is coming back into the market. And on the future side, or the derivative side, we have lots of short liquidity that's been building for 6 months for Bitcoin that's still in place that we could easily use to break out and make new all-time highs. So as usual with Bitcoin, I'm optimistic, especially since we've already done a pretty max pain event. And until we start losing levels again, I can't be pessimistic or have like a bad outlook.
Yeah. So basically, again, if you're a long-term trader, expect a short-term volatility in September, but just look at the big wallets. Are they still accumulating? That means the general sentiment is still positive. So I would say I'm gonna just look at them and say and see if they are still accumulating, and I'm gonna be really safe in that regards. But if you're a short-term trader, I mean, buckle up, you're in for a rough ride.
Yeah, that's the best way to put it. Is short-term traders, what generally happens with short-term traders is that they get played on by their emotions. They get thrown, they either put themselves into the bullish or bearish camp, and they trade on their emotion. Eventually they pay their money back into the market cycles them out, and the larger long-term traders accumulate for the continuation.
Yeah, I think that is everything. We covered just about everything that we can at this moment. Hopefully nothing major is going to happen. We are recording on the 27th, so there are still a couple of days until the end of the month. But this is the overall status of the market. And to everybody, see you next month. Thank you so much, Chris.
Thank you. Have a good one.
Cheers.